How does a 167-year-old giant of global finance just vanish over a weekend? It seems impossible, right? Well, today we're going to dive into the spectacular collapse of Credit Suisse. It's an incredible story of scandal, panic, and a desperate race against time.
I mean, really think about that for a second. This bank made it through 2 world wars, the Great Depression, the 2008 crash, basically every major crisis for over a century and a half. So how does an institution like that just implode in a couple of days? The answer is sent a shiver down the spine of the entire financial world.
And if you want to see just how fast this all went down, look no further than these numbers. Just days before it collapsed, Credit Suisse was worth $8 billion. The price its rival UBS paid for it in an emergency sale, just $3.25 billion. Poof, more than half its value, gone, in a weekend. So what on earth happened?
All right, so to really get the scale of this collapse, you first have to understand just how big this institution was. This wasn't just some bank. This was the end of a legacy that was deeply woven into the fabric of global finance.
Let that sink in. Since 1856, for over 160 years, Credit Suisse was one of the 2 pillars of Swiss banking. It was what experts call a systemically important institution. That's just a fancy way of saying it was so big and so connected that its health was considered vital to the entire global economy. Its failure was quite literally unthinkable.
But here's the thing. The final collapse wasn't some sudden, out-of-the-blue heart attack. Nope, this was more like a long, slow terminal illness. The bank was already incredibly weak from years and years of self-inflicted wounds long before that final weekend.
And this quote, right here, it just hits the nail on the head. It wasn't one single mistake. It wasn't one bad trade. It was a relentless, non-stop drumbeat of scandals and bad decisions that just chipped away at the one thing a bank absolutely cannot live without: trust.
And the pattern is just staggering. I mean, look at this timeline. Kicking off in 2020, you've got a Spygate scandal so weird it forces the CEO to resign. A year later, bam, 2 massive implosions back to back. Archegos and Greensill that showed a culture of insane risk-taking. And then, to top it all off, an actual criminal conviction for helping launder money for a drug ring. Any one of these would be a 5-alarm fire for a normal bank. For Credit Suisse, it was just another Tuesday.
Let's just hang on this number for a second. $5.5 billion. That's how much money they lost from just one client, Archegos. And get this, their own internal report said the bank had enabled voracious risk-taking. This wasn't bad luck, this was a complete failure of common sense, and it literally vaporized years of profits in the blink of an eye.
Okay, so the bank is already on shaky ground, riddled with scandals, and losing billions. The stage was set. It was basically a house of cards waiting for a stiff breeze. And in March of 2023, the global markets started to blow a hurricane.
You couldn't make this timing up. It was just catastrophic. At the exact same moment that Silicon Valley Bank is failing in the US, sending fear rippling through the entire system, Credit Suisse decides to announce, "Hey everyone, we've found material weaknesses in our own accounting." It was like yelling, "I think I've got a cough," in the middle of a plague ward. Of course people were going to panic.
And then this happened. This was the kill shot. The bank's biggest shareholder, the Saudi National Bank, is asked on live TV if they're willing to put in more money to help calm things down. The chairman's answer? Absolutely not. 2 words. That's all it took to snuff out the last bit of hope and kick off a full-blown catastrophic bank run. The effect of that one comment was just immediate and brutal. An estimated $10 billion was being pulled out of the bank every single day. Let me be clear, no bank on planet Earth can survive that. The confidence that took 167 years to build was gone in a few hours.
So now the bank is in a death spiral. Swiss regulators are looking at the calendar and realizing they have one weekend to stop this from triggering a global financial meltdown when markets open on Monday morning. The clock was ticking.
What happened next was just a frantic 72-hour marathon of high-stakes negotiations. Regulators pretty much locked the rival bank UBS in a room and told them they had to buy Credit Suisse. This wasn't a friendly merger, this was a forced marriage, an emergency rescue to keep the whole system from catching on fire.
So what did this wild last-minute deal actually look like? Well, first, UBS got its historic rival for that fire sale price of $3.25 billion.
Second, the Swiss government had to step in with $9 billion in guarantees just to get UBS to say yes. But this last part, this is what really sent shockwaves through the market. 16 billion euros of something called AT1 bonds were wiped out. Wiped out to zero. Now, these bonds are designed to take a hit in a crisis, but they're supposed to be safer than stocks. In this deal, the bondholders got nothing, while the shareholders got something. It completely flipped the rulebook upside down.
Okay, so the giant is gone, its rival swallowed it whole, and the immediate crisis is over. But what does it all mean? What have we learned, and why does this crazy story matter for the future?
Well, here are the big takeaways. First, the old idea of a bank being too big to fail isn't an ironclad promise anymore. Second, if you're an investor, the rules have changed. Just ask those AT1 bondholders who lost everything. But I think the biggest lesson, the one that really stands out, is this. Credit Suisse is a terrifying case study in how a death spiral of bad reputation can kill even the biggest institutions. In today's world, trust is everything.
And that really leaves us with this final, pretty unsettling thought. For more than a century, Credit Suisse's massive size was its shield. But its collapse proved that in our modern world of social media and instant digital bank runs, no one is truly safe. So the real question isn't just how Credit Suisse has failed, it's who's next.